Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is September 26, 2012. Lots to talk about, so let's get started. This is the chart of the SPY, which is the ETF that tracks the S&P 500. All right, so I'm going to do things a little different today. I just want to show you the intraday chart first. The intraday chart here is a 10-minute chart, so each candle is 10 minutes. Yesterday's start day was here at these dotted lines. The end of yesterday was here, which was also the start of today, and the end of today was here. So if you look at these white lines coming straight down, you'll see it's a span of 2 days. So yesterday, as we discussed in a previous video, this 144.30 mathematically calculated level held up. We got that intraday bounce from here to here, which was a good bounce, a nice solid bounce. And then we came down today. All right, we continued the downward motion today right into this bottom trend line. As you can see, this bottom trend line on the daily chart. I'll switch to the daily chart later, but you'll see that this bottom trend line, it kind of pierced through it, but we never got a confirmation, meaning after we broke through it, we didn't get another candle that closed below this candle, which did not solidify or validate this breakdown. Okay, and in any case, they saved it. They, meaning institutions or federal or the feds and whatnot, the government or whoever, saved it because they know if they do, or if we do close below this bottom trend line, then we'll be in a whole heap of some trouble here. In any case, we went up right into the 20 moving average here, and this is again the 10-minute chart. We pulled back. We made these two tails here, which indicated a possible already a reversal, but that didn't happen. A lot of times when things fail like this, you can kind of see or kind of tell that it is manipulation, but you know that's hard to tell right now because there's no volume supporting this. But whenever you run into this time of the day here, and if and the entire day within itself was only 146 million, which is still low volume, you want to look for long plays and not down plays. So in this case, yes, this did look like a reversal, but you know it would have been a higher risk to take a short on this reversal here simply because the volume was so low. In any case, moving on, what we did was we formed this bullish consolidation. We broke higher, but it wasn't very much, and we just started trading in the sidewards motion here. Okay, it was more of a sideways kind of thing today. I mean, we came down and we just kind of traded sideways here. We ended up closing right above the bottom, which means there is some strength for tomorrow. If you look at the bigger picture, however, this down move here and then this move here is still bearish. Okay, so this is more like a bear flag, if you will. Actually, it's kind of like that, and it looks like the bear flag has already tried to play out. So let me just redraw this so it looks a little bit better. We come down here, and then I can actually draw a line just like that, and then draw a line just like that, and then this is your channel here, or this bear flag, and then we break down from this bear flag, right? And then you know, now we would just have to wait for a retest of this bottom trend line here before heading down lower. Okay, so let me just back out of this here, reload the drawings so we get a fresh slate, clean slate here, and take a look at the daily. All right, this is the daily chart of the SPY, which is, in case you didn't already know, the ETF that tracks the S&P 500. Okay, so let's take a look at this. We went right into this bottom trend line, and I said in the previous video, if we got to close below this bottom trend line, then we'll most likely hit this 141.95 to 141.50 level here before getting a nice bounce, which is going to coincide with this 50 moving average. In today's case, however, we were unable to break down from this bottom trend line here, and they saved it and they closed it above this bottom trend line here. This could indicate a bounce for tomorrow. Okay, so just keep that in mind because we had that here, we had that here, we had that here, and so on and so forth. But one thing to keep in mind here and here, what is the difference between all of these reversals and this reversal here? Or I wouldn't say a reversal, but a possible reversal. Well, this is a hammer candle. This is somewhat of a spinning top. This is doji, right? This is this bottom candle here is more of a hammer doji. We have dojis, and as you all know, that these are single candle pattern reversal signals. Okay, this is nothing. This is not a candle that's indicating a reversal. In fact, what we have is a 144.30 level right above it. We have the 20 moving average right above it. So unless the feds or the institutions come in to save this, this guy's coming down lower. In fact, I'm thinking this guy's going to hit this 141.95 maybe sometime tomorrow. That's definitely a possibility. However, the only thing that's keeping me from saying that it's going to head lower and break down from this bottom trend line is the fact that we did do it on high volume today. Today's action wasn't on high volume. Again, it's 146 million, right? And our average is about 150. But if you think about it, this is higher than the past previous 3 days. And again, you know my rules, right? Past previous 3 days is needed in order to validate a substantial possibility of a reversal, right? Yesterday I said, oh yeah, this was higher volume, but it wasn't higher than the past 3 days. Today we got higher volume and it was higher than the past 3 days. But you can look at it two different ways. The first way to look at it is that after a substantial down move here, we had high volume, which indicates a reversal. Normally, this indication of a reversal on higher volume is when you have a candle like a doji or a hammer or some sort of engulfing candle or whatnot that indicates a reversal. Okay, so that we're not getting on as far as the candles go, but we are getting it in the volume. You see how that contradicts itself? So basically what I'm trying to say is, because we have higher volume here, this means that this price here is validated. Okay, you see how that contradicts itself? Okay, so the first thing is we could get a reversal because of higher volume, and the volume's been higher than the past 3 days. The second thing is that contradicts this is that because we got that volume, this price is validated, meaning this is more of a validation that the price or the downward motion is in play. Okay, so that bearishness and bullishness as far as the volume and the candle pattern goes, that's break even. Okay, meaning it contradicts itself, so it's a 50-50 chance that we might get a reversal tomorrow. However, it's sitting right on this bottom trend line here, which is giving it some support. We also pierced through this 144.30, and we pierced through the 20 moving average, which is telling me also that there is some support over there, which could indicate a definite reversal tomorrow. Okay, so I hate to say this, but right now, because they were sitting right on support, there is a possibility that they could bounce it tomorrow. But again, just like yesterday, I don't think it's going to be a substantial bounce. In fact, more than likely it's just going to be somewhat of a consolidation pattern before breaking down the bottom trend line. Now I've always said, back all the way over here, I was telling you guys that we might actually break down already, and we haven't, because the Feds kept on saving it and saving it and saving it, right? Well, the election is November, so that tells me that if this thing does fall, I don't think it's going to fall very far. Okay, to be honest with you, I really don't, because the election year is in November. The head man, the man says that he got elected on this day when the market was at this price, and now today it's going to be at this price, which is higher than when he got elected, so that looks good for him. All right, and this also looks good for the economy, because the people who aren't traders and don't know any better and don't know what inflation is and blah blah blah, they just look at the news and see that the stock market is going higher. That gives them more confidence to spend more money, and they believe, or Uncle Ben believes, that when the public spends more money, it's putting more money into the economy, which in turn increases or strengthens the economy. But we all know that that's not true, that inflation is probably not the best idea. So take it for what it's worth. It's 50-50 chance we're going to get a bounce tomorrow. That's what I say. But right now, if I had to put my money down, I would say that we're more bearish than we are bullish, and that's simply because we are definitely in an overextended area already. A lot of people were saying, go long here. I saw a lot of people saying go long as soon as it around here, because everybody was saying that this is bullish consolidation and to go long. Okay, in fact, people were saying to go long over here. Okay, this area over here, and I was just sitting back saying, yeah, you are right. It is a bullish consolidation, but guess what? We are in a period where, you've been overextended already. When you have too many consolidations in a row, you're gonna need to pull back, you're gonna need to correct, you're gonna need to settle down, and then you can break higher. In addition to that, I did discuss Apple. Alright, you remember 2 videos ago we talked about Apple, and I kind of briefly mentioned that yesterday, that Apple had a divergence. Apple being one of the biggest stocks in the S&P 500, if Apple goes down, the S&P would probably follow, right? I mean, that only makes sense to me. We broken down from Apple yesterday from this bottom trend line, so it did make sense that it would continue down at least into this 50 moving average, which is right below there. Okay, so I will not be surprised if Apple gets a bounce at this 50 moving average, which would coincide with the 141 on the SPY. Okay, so let's take a quick look at that with Apple real quick of what I discussed in previous videos. You see this? This is the ultimate oscillator here. We have this high point here, and then we have another low point here. Okay, now if we just draw a line straight up and down, I don't think it will. I don't think the software will let me do that. Okay, no, but you see these white lines, right? That's following my cursor. This white line is coinciding with this candle here. Okay, this white line is coinciding. If I just go straight up with this candle here, this is continuous buying. Okay, it's in an uptrend, but this is making new lows. That's telling me that there's distribution going on with the institutions. And what a lot of times, and what I've talked about in my previous videos, is when a stock or ETF, mainly stocks though, when they're at their highs, what do I mean by highs? I mean, you can never determine what the top is going to be. I mean, sometimes you can, but consistency is key, right? So if you can't be consistent in calling the tops, then I really would stay away from that. And if you get around there, then that's great, right? But the bottom line is, what institutions will do is when they feel like they need to distribute these stocks. And I mean, if you were me, you could only buy a few, Apple shares. I mean, 100 maybe at most, right? I mean, in my opinion, simply because I mean, you don't want to invest your whole capital in buying or selling one stock, right? It just wouldn't make sense. So here's the bottom line: when an institution or a bank or whoever buys Apple, they're buying hundreds of thousands of shares because they have millions and billions of dollars to do so, and which is why they can manipulate the markets the way they do, right? But who in the world is going to buy that many shares? I mean, let's just say they buy the low end, which is 100,000 shares of Apple. Who in the world, or as a retail trader, is going to be able to buy 100,000 shares of Apple? In my opinion, I wouldn't be able to do it. Maybe you could, but I definitely wouldn't be able to do it. Now, I don't know anybody else that could. So, in my opinion, these institutions need to distribute these stocks and sell it off, right, to a whole bunch of retail traders in order for them to make money. And what they'll do is they'll release to the news or release on TV or put it on the internet or whatever and say, buy Apple, buy Apple, buy Apple. Apple's going to be a $2,000, $10,000 a share stock, in 6 months. So everybody, all the retail traders, the inexperienced traders, will just jump right in because they don't want to miss the boat. What these traders don't realize is that you would normally wait for a pullback or a correction first before getting in on anything, right? Because on the long side, obviously, but they jump in when the stock is already high, so that gives the institutions the ability to distribute their stocks and then sell it off. And then the way you can tell if that's happening sometimes is when you see divergences in the ultimate oscillator. You can find divergences in the RSI and the STOs and whatever else. But for me, I use the ultimate oscillator, and I find divergences through this. Apple had a huge divergence for a long period of time. Just is telling me that Apple is probably going to break down. It's hard to determine when, but we did discuss this candle here on higher volume, right? Remember, we had this discussion on that video there, and I said there's a high possibility that Apple would probably pull back because of this high volume candle here. Sure enough, it pulled back. I didn't short this trade. I didn't take this trade. I didn't sell it, unfortunately. But the point being that I did mention this, and I think two previous videos, I think it was. And sure enough, Apple looks like it's breaking down. It looks like it wants to head for this 50 moving average. Now the question is, who's going to save it? Are the Feds going to save it? And if they do, you put a tight stop in there, and you just change your trade. You go from sell to buy, right? It's as simple as that. Switching back to the SPY, let me just load my drawings to clear this board here. I went short right on this day here, which was a couple of days ago, because it closed and it wasn't able to close above this upper trend line here. So I went short there, and now I'm definitely in the money. I already have a in the money in the what is that? I already have a break-even stop on this trade here. What is a break-even stop? Basically, it means that if they save it tomorrow and this thing goes against me and it goes higher, and there's definitely a possibility of that because of the manipulation in the market, you have to protect yourself. If you went short the same time I did, you have to protect yourself, put a break-even stop. That way, if it does go against you, you get stopped out, break-even. It's like you never took the trade in the first place. Not a big deal. You wipe your hands clean, you wait for a pullback or some sort of a consolidation, and then you go long. Okay, it's as simple as that. Anyways, this is your 7-minute market update, now into 14 minutes. Thank you very much for stopping by and watching this video. I hope that you guys are making a lot of money, taking the money from the institutions, like hopefully, because we don't have that kind of money to manipulate the markets. And the stock markets are manipulated, and we just have to deal with that fact. I mean, that fact will always be there, right? There's always going to be insider trading. There's always going to be money manipulation. There's always going to be all that kind of stuff. Oh, before I go, almost missed the most important thing. This is the US dollar futures. Okay, I did mention that we're going to get support. I mean, I'm sorry, resistance right here, which is probably why we got a pullback on the market. So just keep in mind that this will indicate that if we do get resistance here, we will see a bounce in the markets tomorrow. Okay, but if we can somehow punch through here and get to this $80.61 level, then I'm definitely going to take all the shares off the table, turn around, go from sell and go into buy and go long the markets and short the dollar. Okay. But for now, I'm just going to wait and see what the dollar does. The dollar could pull back, which would make sense in my opinion because we have the 20 moving average there. Plus, we have this resistance point here. So there's a possibility we get a bounce tomorrow. Okay, so just keep that in mind. In any case, thank you very much. Good luck to you all. God bless to you, and I hope to see you in the next video.